Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 25th, 2025, and we're diving into the latest earnings report from PennantPark Investment. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. PennantPark Investment, a business development company, has just released its financial results for the fourth quarter and fiscal year ended September 30th, 2025. I'm excited to break down the numbers and discuss what they mean for investors.
Revenue and profitability overview. Let's start with the revenue and profitability. PennantPark reported a net investment income of $9.8 million for the quarter, translating to $0.15 per share. John, how does this compare to expectations?
Well, the reported EPS of 15 fell short of the analyst's forecast of 0.7. This shortfall is primarily due to a decrease in investment income, which was $28 million for the quarter, down from $36.5 million in the same period last year. However, the company did see a positive net change in unrealized appreciation of $9.9 million, which is a good sign of potential future gains.
And what about the net realized losses?
The net realized losses were significant at $21.6 million, primarily due to changes in market conditions affecting the value of their investments. This is a concern as it impacts the overall profitability and net asset value.
Portfolio and investment activity. Moving on to the portfolio and investment activity, PennantPark's investment portfolio stands at $1,287.3 million. Can you tell us more about the composition and performance of this portfolio?
Absolutely. The portfolio is diversified across 166 companies, with 45% in first lien secured debt. The weighted average yield on debt investments is 11.0%, which is quite robust. However, they have 4 companies on non-accrual, representing a small fraction of the portfolio, which is a risk factor to watch.
How does this compare to last year?
Compared to last year, the portfolio size has slightly decreased from $1,328.1 million. The number of non-accrual companies has increased from 2 to 4, which is something investors should monitor closely.
Operational efficiencies and future outlook. Let's discuss operational efficiencies and the future outlook. PennantPark's expenses for the quarter were $18.1 million. How does this impact their net assets and overall financial health?
The expenses have decreased from $22 million last year, which is a positive sign of operational efficiency. Their net assets are at $464 million, with a net asset value per share of $7.11, down from $7.56 last year. This decline is primarily due to the realized losses and lower investment income.
What did the CEO have to say about the future outlook?
Art Penn, the CEO, emphasized their focus on the core middle market, which typically offers attractive credit spreads and lower leverage. He also mentioned their strategy to utilize spillover income to support dividend coverage, which is crucial for maintaining investor confidence.
EPS forecast and analyst expectations. John, let's talk about the EPS forecast. Analysts were expecting 17 cents, but the actual EPS came in at 15 cents. What are the implications of this shortfall?
The $2 shortfall in EPS is a concern as it indicates that the company didn't meet market expectations. This could lead to a negative sentiment among investors and potential volatility in the stock price. However, it's important to consider the broader context of their investment strategy and market conditions.
How many analysts were involved in this forecast?
There were 4 analysts who contributed to the EPS forecast. The consensus was 17 cents, so missing this target could impact the stock's performance in the short term.
Key takeaways. As we wrap up, let's summarize PennantPark's performance. Despite some challenges, they have maintained a strong portfolio with a net investment income of $9.8 million and a net asset value per share of 7.11 cents. John, any final thoughts on their investment prospects?
PennantPark's focus on the middle market and operational efficiencies are positive signs. However, the increase in non-accrual companies and the EPS shortfall are areas of concern. Investors should keep an eye on how these factors evolve in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analysis. We'd love to hear your thoughts on PennantPark's performance in the comments below.